everybody, and welcome to another segment of Accounting Imbalances How Do I series. In this segment, we get to talk about how do I calculate basic earnings per share, which is one of the most important numbers in accounting. Let's jump into it. Our example this time is about Cougar Company, which was a relatively small company with 4.2 million shares of $10 par value common stock issued at the beginning of the year. Of those 4.2 million that had been issued or sold at some point, 3.9 million were still outstanding. That means they've got 300,000 shares of this common stock as treasury shares or treasury stock. We know that because shares issued are the ones that we have sold at some time in the past, and shares outstanding are the ones that are still out there with our owners. And the difference between shares that we have sold and those that are still out there are our treasury stock. In this case, 300,000 shares. On March 15th of the year, we resold 100,000 of those 300,000 shares. Then on August 1st, they split their stock 2-for-1, and on December 1st, we sold another 50,000 shares of that treasury stock. By the end of the year, they'd reported net income of $30,712,500 and had 97,500 shares of $100 par value 10% preferred stock that had been outstanding all year. And with that information, we have everything we need to calculate EPS. Now, the key to calculating basic EPS is to break it into two key parts, the numerator and the denominator. Now, the numerator is the part of our profits that belong to our owners, our common shareholders. So we're going to take our net income as reported on the income statement and subtract any portion of that net income that belongs to somebody else. And really, the only part that will belong to somebody else is the part of that net income that I have to take and pay to my preferred stockholders. I'm going to owe them a dividend. Matter of fact, it's a 10% dividend on that $100 par value. So let's start our process by calculating how much of that $30,712,500 will go to my preferred stockholders. I'm going to start that with the number of preferred stock shares. 97,500. And then I'm going to multiply the number of shares by the par value and by the percentage. So the dividend rate is what we call that percentage, and in this case, it's 10%. So my preferred stock dividend will be 97,500 times $100 par times 10%. So I'm supposed to pay them $975,000 each year. Now that I've calculated that dividend, I can figure out the numerator for my earnings per share calculation. I take my net income as reported, so right from the income statement, 30,712,500, and then I'm going to subtract from that my preferred stock dividend. EPS numerator. Now that I've got my numerator, I'm halfway there. Well, sort of. The second key number in doing my EPS calculation is calculating my weighted average shares outstanding. And this is a long process, or can be a long process. It depends on how many transactions have happened over the course of the year with a company's common stock. Because every time the number of shares changes, I have to re-weight, recalculate the value of my shares. So the easiest way to do this is to create a table. And I'm going to do that right down here. We're going to start with the date. And then I'm going to calculate my shares outstanding, the number of shares outstanding on that particular day. And then I'm going to make an adjustment, if any, for stock splits and dividends. And the reason I make an adjustment for stock splits and dividends is because I treat them as if they had happened from the beginning of the year. Next, we'll calculate a fraction of the year, and then we'll be able to get our weighted average. So let's format this a little bit. Let's start with the beginning of the year. So this is 1/1. We had 3.9 million shares outstanding. And then we go to the next date where the number of shares change, and that was March 15th. And on March 15th, we resold 100,000 shares of treasury stock, which means that if I sell them, they're back out with new stockholders. So this number is going to be the 3.9 million plus 100,000. So I now have 4 million shares out there in the hands of my owners. The next date of the change will be August 1st. And on that day, I did a 2-for-1 stock split. So I'm going to take that 4 million shares and multiply it by 2, because every share I used to have is now 2 shares. That's now 8 million. Now I have to go back and make an adjustment for these stock splits. And the reason for that is because in doing our weighted average, we're trying to calculate how many shares have been out there over the course of the year. And if I take this 1 share and turn it into 2, those shares, those 2 shares, since they were originally part of this 1 original share, have been out there the same amount of time that their parent share or their original share was out there in the hands of my owners. So let's go ahead and make our adjustment for this. If that had happened on January 1st, I would have had double the number of shares there. I would have had double the number of shares on March 15th. And then I won't do it again on August 1st because I've already made that adjustment. So now let's do December 1st, which is the last day. And on that last day, I issued a new 50,000 shares. And again, I won't adjust that one for stock splits and dividends because I'd already adjusted for it on August 1st. So let's go ahead now and calculate the fraction of the year. And the way I'm going to figure this out is it's the amount of time from the date of this change until the next change happens. So in this case, we've got all of January, all of February, and half of March. And most companies will round this to the nearest half a month. So in this case, it's going to be 2.5 out of 12. And if I were writing this out, it would stay 2.5 out of 12. Excel's going to change it for me. If you like that, if that doesn't bug you, fine. If you'd rather see it as a fraction, you can change that by right-clicking, going to Format Cells, clicking on Fraction, and then saying that you want it out of maybe 2 decimal places is usually the best. So this 5 out of 24 is the same as our 2.5 out of 12. And I'm going to take that format and paint it to these other 3 columns. All right, now from March 15th to August 1st would be half of March and then all of April, May, June, and July. So 4.5 months. Again, if you don't like the fractions, you're welcome to leave them as a decimal point. It doesn't matter. It's entirely up to you which way you want to see them. Now from August to December, August, September, October, November would be 4 more months. And then from December 1st to December 31st would be 1 month, so 1/12. Now, I strongly recommend that you stop right here when you finish your fractions and make sure that they add up to 100% or 1, because otherwise you end up with a mistake just because you did some rounding wrong or you counted your months the wrong way. So I've used a sum there and added it up, and sure enough, I come out to 1, so I'm okay. All right, now we'll do our weighted average, and our weighted average is simply going to be the shares outstanding times any adjustment for stock splits or dividends times the fraction of the year. And I'm going to get rid of these decimal places before I copy it down. And you'll notice a little bit of a problem, and this is an Excel issue. Basically, it's treating these as zeros, and I don't want them to be zeros. I want them to be 1. I don't want there to be a change, so I'm going to put a 1 in there, and that's going to correct that assumption by Excel that those are zeros. You don't have to do that. The other way you can do it is to take the 8 million times the 0.33 and just get that cell out of there. So whatever way makes the most sense to you is just fine. And then I'm going to add them up. And that's going to give me my weighted average shares outstanding. For this year, 7,962,500 shares. Now, this is not the only way to calculate the weighted average shares outstanding. This is just one of two methods that both work equally well. It just depends on how you want to think about it. Personally, I like to think about it this way because I'm keeping track of how many shares are actually out there at each stage. That's what makes sense to me. But you don't have to do it that way. You can instead do this calculation based on the absolute set of shares. So for example, I would take these shares on January 1st. I'd multiply them by 2 for the stock adjustment, and then I would say that these 3.9 million shares were outstanding for 12 out of 12 months. I'm going to delete this number down here because the sum won't work for this. Next, instead of using the 4 million, I would just use the 100,000 difference. And that 100,000 shares, again, doubled because of the stock split. That would be from March 15th until the end of the year. So April, May, June, July, August, September, October, November, December would be 9 out of 12. I wouldn't put anything in for August because that adjustment has already been made and taken care of up here. Instead, I would get to the 50,000 in December, and that would be 1 out of 12 still. And you'll notice that these numbers come out to be exactly the same. Which way is best? Depends on how you think about it. If you want to think about it in terms of the absolute number of shares outstanding all the time, you do the table at the top. If you want to think about it instead by the changes, you do the table at the bottom. My recommendation is the one at the top because it makes it easier to adjust for stock splits and dividends. But again, it's entirely up to you. The results come out exactly the same. Now that I've got my numerator and my denominator, I can do my calculation for earnings per share. I'll take the 29.7 million and change. I will divide by the 7,962,500, and I'm going to center these cells so we can see it really well. And there's my value. The only problem is that's not how I'm allowed to show it. According to GAAP, I have to show EPS rounded to the nearest penny on my income statement. So I would need to make one quick adjustment to really have this be the right value for reporting to my investors, and that is we're going to round it to the nearest penny. And if you just hit this button right here, it'll put it in accounting format, which gives it a dollar sign and rounds it to the nearest penny. And you're good to go. And that's how we calculate basic earnings per share. Hopefully that makes sense and you'll be comfortable with this process moving forward. Remember, we'll have more exciting topics in our How Do I series coming up. We'll see you then. Thanks.